Are you wondering if your SBA loan is going to affect any future business funding? I'm going to tap into that question today. Welcome back to the channel. My name's Nick and this is Mystery of Money. Today we're going to tackle the topic of the EIDL loans that were giving out during COVID and post-COVID for a couple years. This is not any disaster loans that are currently being administered by the SBA or by FEMA or anything like that for any of the disaster areas due to hurricanes. This is strictly the EIDL loans that were given during COVID. So what I've seen over the last several months is a lot of new financing requests coming in through SBA Lender Match for additional working capital, equipment, business expansion type needs. And what we're running into is a lot of those EIDL loans that were given out took a first lien position on all business assets. They didn't necessarily have a personal guarantee, so they don't show up on the personal credit report or anything like that. But because it has the first lien on all business assets, any additional funding you get may be delayed or have a temporary denial due to the fact that the bank or credit union, whoever you're going through, cannot get that first position lien. Now, there is a process that you can request to be a subordinate lender. Let's say you get a loan approved, you can submit to the SBA and say, hey, we're providing additional financing to help this business, but we're going to need a first position. More than likely, the SBA will allow that, subordination. But I have seen times where the SBA comes back and says, no, you have to repay that other loan before you can take out additional money. Now, where this becomes tricky is a lot of businesses took out the loans, whether they needed it or not, and that's for them and whoever else to judge. But if you have a business making $150,000 in gross revenues and they got a loan for $400,000, even though the payments on that loan are going to be small because it's over 30 years, it's still going to be a pretty substantial payment given the cash flow of the business. Now, even though the SBA takes a subordinate position behind it, the bank is still going to work your cash flow and say, okay, you have that $2,000 a month payment plus the new payment. Will your cash flow support the new debt? That is where a lot of businesses are getting into trouble, because even though that payment is low, it still adds to the total debt service of the business. Another reason that the SBA EIDL loans may cause some issues is because your loan officer or the bank is going to ask where that money went. So if you are a business that had $150,000 in revenue and you borrowed the $400,000, but your balance sheet doesn't show increased cash or inventories or equipment, anything like that, they're going to wonder where that money went. And yes, you could have used it for salaries and payroll and all of those other expenses, but somewhere on the balance sheet that the cash infusion landed in the business. So just be prepared when that question arises where that money went. Now, because if you're applying for a new loan through a bank and it's going to be SBA, the SBA is going to require that first lien position. Even though the SBA and EIDL are the same, it's still going to be a different loan. So they're going to have to ask for that subordination just like any other traditional lender. And the SBA is now going to look a little closer at that loan and say, okay, did you use it for the intended purposes? Were you impacted? Things like that. And as we've seen in the news and other types of publications, there's a big default rate on the EIDL loans. The last I checked, there was over $34 billion in delinquent loans that were EIDL approved. So because of these higher default rates and fraud and everything else, the SBA is really taking these loans with a microscope and saying, did that make sense? Are we willing to do a subordination, or do you have to pay the loan back? Things like that. So just be aware that if you got the EIDL loan, there may be some extra steps that you have to do in order to get additional financing. It's not impossible. I've done a lot of loans over the last couple months where we got the subordination. The customer could prove that they needed the funds, that they used the funds for the correct and intended purposes, and everything was all good, and we were able to, fund that business additionally. But I've also had some businesses that were really underwater on the balance sheet. The sales were not there, the income was not there, and they weren't able to be financed. So something you want to talk through before you ever submit an application, if you talk to the bank or you do an SBA lender match, when you're matched with other banks or other lenders, be forthright with that information and say, I have an EIDL loan for X, this is my monthly payment. What is the bank's stance on that? Am I able to get an additional loan? That's going to be your biggest hurdle when it comes to new financing, is seeing that loan amount, what the payment is, obviously your credit, because the EIDL loans were given with a much lower benchmark of a credit score, and now the banks have really creeped up that credit score because they want to make sure they're making good, solid loans that are going to be repaid. I hope this information helped you out a little bit with the EIDL loans. I know they haven't really been much of a topic since they were originated, but it's one of those that we're kind of now seeing the delayed consequences of those loans. Again, this is just for the COVID loans, not any hurricane disaster loans, things like that. So if you have any other questions, post them in the comments below. Send me an email, whatever works for you. I can answer them as best I can. The other resources are check out the SBA.gov website and go from there. But if you need funding, don't let it hinder you to try and get it. Just be more conscious of the process. I wish you the best in your business, and until next time, have a great day.